Good morning, everybody. Happy Friday. Get started here in about 5 minutes. Good morning, everybody. Happy Friday. Happy Friday. Kind of a volatile week. Just about get started. Getting in a couple of seconds. Yeah. I think everything is working. Hey, good morning, Matt. All right, let's just do you guys give me a thumbs up, see if you are hearing me and seeing everything. Okay. All right, thank you, Mr. Kenneth. All right. Good morning, Callie. Good morning, Miss Fay. Good morning, Ro. All right, let's go ahead and get started. I'm going to jump out to the indexes just for a moment here, kind of look around at some of the bigger picture type things. On the equity indexes, looking at 60-minute charts here, just kind of get a feel of the direction. Still looks like we're going to continue to move up. And it would appear that the Russell is starting to participate and get a little stronger here. The Russell is the only one of the indexes that has not made an all-time high yet, but it is making a pretty good run to it now. Okay, thanks, Matt. All right. But I had a hard time trying to find some zones. Okay, so as we're starting off looking at the S&P, we can see we're still inside the prior day's trading range. That is often a pretty good signal that things are going to be a little choppy. Now, as we start off with an inside day, okay, it doesn't mean we'll stay that way, but as we start off with an inside day, um, there's some conditions around the trading aspect of it, the application of the trading, okay, which tends to lead us into a little more choppy, a little more whipsaw in the price action. We are still seeing fairly light volume on the Dow 30 stocks in the pre-market. As we look at the cash value, we have currently seven Dow stocks up over 94 cents and one down. That leaves a net of six positive. And we take that number and multiply it by two, six times two would be 12. So cash equals 12 and futures are trading at 11 and change. Okay. Now, what that tells us is that futures and cash are somewhat balanced. When we have momentum or any type of good trading environment, um, away from the choppy market condition, okay, um, when we have, sorry, when we have the inside day and we have that kind of choppy market condition, there's some things that we include in our pre-market assessment. We start to take no taking breakout trades, okay, because they often are very whipsaw and kind of stop us out, okay. We tend to have better trading environment a little later in the session, okay. Now today we don't have any economic reports other than Baker Hughes at 1 p.m., a Fed chairman at 2:30, and today is last trade date for financial futures products, the equity indexes. Okay. So last trade and also quadruple witching, options expiration and such. So it's kind of unusual to have such light volume going into that, but with the market environment that we saw with the FOMC meeting, it's quite the whipsaw until the Fed came out and kind of gave the wink, wink, nod, nod about potentially two more rate cuts. And we had um, two or three Fed chairmen speaking today in the pre-market. I think it was two. Um, let's see. Yeah, it was. I think it was. Um, yeah, we also had an SEC chair speaking. All of these folks have been speaking a lot more, and that's just something that, yeah, Fed cash carry came out about an hour ago. Oh, sorry, about 35 minutes ago, giving some comments. Those comments will probably hit the mainstream media here just shortly. Prior to that, there was another Fed chairman. So my observation, and it's just an observation at this point, is I'm noticing that there is, and maybe it's just because I have a different news wire service, but I'm noticing that there's been more interviews regarding Fed chairman and such in the pre-market. There's been, where we have Bessent and we have also the SEC chairman, not chairman, SEC chair. Yeah, I guess it is chair. Um, Coming out in the pre-market and doing interviews on Bloomberg, doing interviews on Fox, doing comments to media, and it's causing some additional volatility in the pre-market. Okay. Now, this doesn't make a trade at this point, but it's just something that, they're trying to pile out the news in the pre-market, kind of set the tone for the day. Okay. In the pre-market, it can cause things to be a little more volatile, mainly because of the lighter volume and such. And let's see, two Dow stocks down. We got nine, 7 times 2. Yeah, see, cash and futures being balanced. And remember, futures follow the cash market. And I use the Dow 30 as an odds enhancer. Okay. The Dow 30 is a price weighted index where the Russell, S&P, NASDAQ are market capitalization weighted indexes. And simply meaning that the large market cap stocks impact the index more than the small market cap stocks. And this is one of the reasons that we carry or observe over and over again is that top 8 large market cap weighted stocks. Now, many of these stocks are listed on the Dow, S&P, and the NASDAQ. So you're going to see those correlate more often. Okay. Something to keep in mind and always be adjusting for is where's the all-time high? Because we're at that range, that high point in the marketplace. It does impact if we start making new highs, people become more bullish, stops are getting run, as far as stopping out and so on. Let's see. Also noticing in the pre-market, we have overnight session, US dollar's been moving up, 10-year yield moving up, and the 2-year, the short term, it's been moving up probably it's hourly chart, so the last several hours it's been moving up, but a little more on the consolidation side, okay? Notice some very low readings on the pre-market trend, okay? Now, I just make reference to the trend simply because it gives us a feel of what's going on with the NYSE stocks, okay? What are those stocks doing in the pre-market? Now, with the lighter volume and with fewer stock, not all the stocks are open on the NYSE at the moment. You just get a feel, okay? It's not an absolute here, but you get a feel for what trader sentiment is in the pre-market. The trend just reflects the advancing issues over declining issues, volume, and so on. So it's a reading of the whole New York Stock Exchange, not just the index. Now, lower readings imply there's more downticks, down volume than upticks and up. Let me see, I got that backwards. No, I got that right. There's more downticks and down volume, so there's a little bit of selling because trend low, time to go, trend high, time to buy. Now, when that doesn't work is when you have the trend low and the market's going lower. If you have the trend high and the markets are going higher, this could be kind of a short squeeze. It could be somewhat of a um, kind of an inverse related here. Okay, so basically, when the trend is high, we want to see the markets dropping. When the trend is low, we want to see the markets, or more specifically, the indexes rallying. Okay. So when they're selling into an up move, we'll have a low reading on the trend. Okay. Up move on the indexes. When they're buying and the indexes are dropping, we'll see a high reading on the trend. Okay. Um, Volatility index has been kind of quiet in the overnight session, and I do want to bring up the QMI. And what we're looking for on the QMI is it gapping up or is it gapping down? Okay. And currently on this, it's flat. Now the pre-market indicator, well, actually it did gap up, didn't it? Yes. Okay. So the pre-market indicator has a 92% correlation as to trader's sentiment at the open. Okay. Doesn't necessarily give us a specific trade. It just says, hey, the sentiment is a little more bullish. Now, this is related, this is a NASDAQ related indicator. Okay. The NASDAQ uses this to help gauge the open and market participants. Okay. So it has we're seeing a bullish reading on the NASDAQ 100 indicators um, with the gap up there. Okay. All right. And a lot of that can be seen the pre-market indicator because it's NASDAQ 100. All of these are on the NASDAQ 100. So if you're looking across the board at, is it going to be a big gap up? Are they mixed? Are they strong uh, pre-market activity gapping up? Now, the main ones here while we're watching the markets, especially the equity indexes, Microsoft, Apple, and NVIDIA, if they're all going in the same direction, we have a little more clarity. If you have one or two up or down, one or two inverse of the other ones, then the market conditions get a little more choppy. Okay. So I'm kind of going into a little more of a description of what we're looking at, mainly because the equity indexes are starting off as an inside day, and that kind of leads to more of the choppier conditions. Now, not every day is there really active trading, okay, where low risk, high probability, okay. Some days the market starts off choppy. So as we're looking at and doing a pre-market routine, kind of looking around, if we're an inside day, that has been very highly correlated to um, more choppier conditions around the open. Now you add into that, well, what's the pre-market volume doing? Okay, how many stocks are up, how many stocks are down, and you kind of get an idea whether futures are oversold or overbought, trading at a premium versus a discount, futures relative to the cash market. Okay. Now, sometimes when we start off as well, many times as we start off as an inside day, I want to keep you safe and remind you of the rules around inside days. Okay. The choppier conditions, trading later in the session, and also looking for the gap fill. Okay. Now, I use the 5 p.m. close. Some traders use other times like the 4:15 close and so on. And that all those are okay. It's just how you measure it and you see the results. How do you incorporate that information into your trading plan? Okay. There's no right or wrong about it. It's how you see it and how you plan for the risk and the potential reward and their trade. Okay. So, um, as an inside day, I won't take any breakout trades. I anticipate a gap fill, and if we're going to get the gap fill, 5 p.m. close, price must come back down after the open. Okay. So I do have a direction, and then around that gap fill, I want to see if there's any demand zone or a leg base. And for me right now, I think it's right around that area there. Okay. Now, we tend to take just zone entries using the leg base around or on inside days as well. Okay. So as the market starts to open, I'm anticipating a little more choppiness, a little more volatility. I'm not going to take any breakout trades. I'm going to anticipate a gap fill, and I'm going to take a zone entry. Okay. So as we put all that information together, this is the area between 66.88 and 66.79. I'm looking to go long in the context of a higher time frame uptrend. Okay. And we can see that the S&P did make an all-time high yesterday, and currently we are an inside candle. Okay, and that inside candle on a daily chart does also, I got that one wrong, also imply it's a decision day. Okay, and decision days tend to be a little more choppy, just as we're describing. So we're putting multiple pieces of information together along with context of trend just to assess how we're going to take the trades. Okay. NASDAQ, also an inside day. Same rules apply. NASDAQ yesterday did make another all-time high in the daily chart. NASDAQ daily chart is a pretty strong move to the upside. In observation, we have taken the last couple of swings in price, whereas in measuring the distance between the high point before price pulled back, okay, and we're getting close to that. It's going to be right around another 200 points higher, 250 points higher on the NQ, right around that 25,000. We'll see that the average distance starts to come in play. And what I'm measuring from is the 50 simple moving average to where the high point of the price is at. Okay, and taking the last three swings, averaging them out, kind of get that projected move. Okay, so I'm expecting something to happen right around that 25,000 on the NQ, where I'll mainly just play defensive. Okay, I'll be defensive, ready for a correction. Now that does not mean that there's a trade at this point, because we're just looking at, where could price run up to? Okay. All right. Now, as we continue to go on, boy, my mouse just must be keeps double clicking when I'm only single clicking. All right. The Dow also having some of the inside days. Inside days, we anticipate the open to be a little more whipsaw, a little more choppy, and we're going to look for price to come back and fill the gap. Now, very often in observation, what is going on with this? Very often in observation, we see that when price starts off inside the prior day's trading range, we're 10 minutes away from the market open, is that these are notable characteristics that we see. Okay. Price coming back and fill the gap many times on an inside day when we open inside the prior day's trading range. Zone entries. Okay. And as price is shooting up right now on the Dow, and probably on the Russell as well. Okay. Russell's an outside day. Now, the rules around an outside day is gaps do not often fill the same trading day. Well, it's a higher probability they will fill on an inside day versus an outside day. Okay. Because, come on, charts, work with me here. I know it's kind of starting off a little bit sluggish as far as the way my tone is and what I'm anticipating is because I'm trying to downplay the FOMOs and trying to get into a trade here and chasing price. That's not what we want to do. We're just evaluating what the market is doing right now, and then we'll look for that opportunity. As I was mentioning, the inside days, we expect a gap fill a high percentage of the time. When price opens outside the prior session's range, okay, it is less probable that the gap will fill the same trading day. Okay. Now, these are observations that I've been doing over the years. They help me gauge the trade opportunities and my activity that going into it. Now I have RTY on the daily chart, and I do have a high point right there at 26.93. Okay. So for the continuous chart on RTY, okay, and this would be the unadjusted, no, adjusted. We have a daily high of 26.93 and a half. Okay, so we're getting close. It is a pretty strong uptrend. A notable chart pattern is that golden cross. Okay, well, to be watched for. A lot of folks use that information to create a bias, whether they're bullish or bearish. IWM has made a new high. Okay. Yeah, the ETFs may have made a new high, but the long-term futures charts, boy, I'm kind of mixed up here, have not. Okay, as we just saw. All right. So far as our internals, as we're getting ready to start here, about 7 minutes, things are still kind of on the quiet side. Crude oil, price just came back down to a demand zone. Price did close back below the 50-day moving average on crude. A lot of choppy range on the daily chart, kind of back and forth. Crude oil is just leaving demand, and but I'm a little reluctant to jump into it at this moment. Noticing the Globex range, 81 cents, compared to the daily ATR, about 1.56. We're about right in the middle of that range. So when the Globex range compared to the daily ATR is about 50%, it can be a little more choppy on the open. Okay, those are just one of the signals that I use personally just to say, okay, let me let the market open. Also, looking at heating oil on a smaller time frame, heating oil has not started to make an uptrend. It's still making lower highs and lower lows, also adding to the probability that the trend has not changed yet, even though we've made kind of a double bottom, little reversal pattern, little higher swing low. Okay, so we got crude oil. We're just going to watch and see how that one opens. Nat gas has been all over the place. Oh, and another thing on crude oil has rolled. We should be on the November contract and the LX. So make sure you're on the X contract. Nat gas still has a few more days before it moves over to the November contract. Okay. And that gas had a nice little pullback. We're waiting to see how they want to participate. Now, we were almost anticipating that the nat gas on the daily chart was looking for that reversal pattern. Okay. Now, nat gas on that daily chart does have a fair value gap, and we use that fair value gap range once that candle is complete, and we'll anticipate price to pull back up to that and before going lower. Okay. So on a smaller time frame, we might get an up move back up to that 2.946 area before we start to move lower. Okay. And that 946, that's going to put us right back up towards the Globex high there. Okay. We talk a lot about things that are not just trading when we're starting off as an inside day. We're gathering more information. Inside day is, especially on what we're seeing here on S&P, NASDAQ, and the Dow, are signals to kind of pull back on the reins. We might be waiting a little longer for some good, clean entries as we start off our session. But that doesn't negate some of the other futures products. As we come over and look at, we have potential trade set up on and some activity on the agriculture products, mainly because of what the dollar is doing in fluctuation. Okay. And as the dollar starts going higher, traders rush in to lock in a price on some of the, what do you want to call it? The USD, let's see, the USD type products where people have to convert their notes into US notes in order to buy these products. Okay. Okay, as we are setting up and noticing, we are away from zones. Okay. And I'm looking over here at soybeans. Now, these may not be products that you like to trade, and that's okay, but it doesn't negate the setup. So looks like the fair value gap price has dropped into it a little too far, but we'll look for that breakout on soybeans above 1,044 and 2/8. Wheat also, wheat's kind of tricky this time of year because we're right near the harvest time, or harvest may have already taken place. Um, and when we have the harvest, like on corn and wheat, um, prices tend to go a little bit lower. Okay, now price did come into a demand zone, and and but this would be more of a shorter term trade at this point. Metals markets and FX markets are going to be really highly impacted by what the dollar does. Is the dollar running into supply? Is it continuing the uptrend? If the dollar is moving up, we will most likely see British pound, Aussie dollar, and Canadian dollar move lower to find demand. Okay. All right. So we got our equity indexes. All right. Let's jump out here to our. I apologize for what's going on in the charts here. It seems like things are slowing down. I'm gonna stop that video. Often when we start off the market, it seems like a lot of my resources get chewed up. So maybe we'll get rid of all that. Yeah, I'm watching short term. Wow, S&P really coming down, but the Nasdaq's not. Let's go back up. That's why we don't take breakout trades on inside days. You see how it sharply retraced off of that. We're looking for the gap fill. Price is pulling back. Talked about that earlier. And then we'll look for that demand zone entry around 66.88 quarter. 66.88 quarter. Place an order out there. Now the volume started coming in pretty heavy on Dow 30 stocks. Now we have to reassess what our futures overbought or oversold. Apple gapping up and Nvidia gapping down. Okay. That's also an indication. Hey, check and see if you're an inside day. You're probably going to be waiting just a little bit longer before prices come into a demand zone or a supply zone. Okay. All right. So we have 5 Dow stocks negative over 94 cents, and we have 7 positive. That leaves us with net of 3 positive times 2 would be 6. So S&P futures are just a little overbought relative to cash. Okay. So we're still anticipating price to pull back 66.88 quarter for a long entry. Let's come back and look at the NASDAQ. NASDAQ still an inside day, no breakout trades, better trades later in the session. We're looking for the gap fill. But I also want to look just a little bit lower here. I'm going to change the time frame, see if we can get a zone. Oh, thanks for that, Liz. Okay. So as far as the NASDAQ, we'll look for that gap fill area or trade opportunity. So I'm going to anticipate price will go a little deeper in that zone. Let's drop down to a 5-minute. Looking to use the late base. Kind of using a smaller time frame just to refine the area, and then just looking for where that 5 p.m. close is. Okay. And the magenta line will be where we're anticipating the gap fill. Now, hopefully you're seeing there's a very methodic way how we gather information in the pre-market to help us assess where we're going to look to make a potential trade. Okay. And I'm going to look for that 24,715. Now on inside days, taking shorter term profits, not sitting in the trade until, or let's see, between 8 a.m. and 11 a.m., I'm going to look to take some shorter term profits, okay? Especially on an inside day. I won't be staying long in some of these trades because the conditions and in our observations over a long period of time, we have noticed that staying in trades on an inside day has we've given back our profits and sometimes taken small losses because we stayed too long. So inside days, we're looking for shorter term trade durations. Boy, Callie, you were going crazy on those keys, huh? Lots of typos. That's all right. All right, what do we have going on? Net gas is popping up. Net gas has given us a little indication using that fair value gap that things have started to turn. Blame the cat. Blame the cat. All right. Crude oil. Russell coming way back down. We're looking at Russell has an unfilled opening gap a little bit lower. I'm looking at Russell right around that 24,783.80. And then we'll place a protective stop loss, 24,67.40. And I just went to a smaller time frame, just kind of look around to see what else we have in here. Testing the support. Let's come back out to the S&P. How are we doing on that one? Okay, we're still waiting for price to come. NASDAQ might be closer. What did I use? 715. It must have been on a smaller time frame. Yeah, looking for where that gap fill is at. See, sometimes when you know what you're waiting for and you've done the research behind it, you start to really see where you're comfortable getting into a trade. Now, when you're collecting the information and the research, okay, verifying the information, that does take time. Okay. It takes time for you to be able to trust what you see on the price chart or what you've been documenting. Okay. All right, what else do we got going on here? A lot of nothing, a lot of waiting so far. Good old Dow. Let's see, we got a small time frame. Did come back down. Might take a short-term trade on Dow. Looking for that leg base, leg base. Dow has already filled the gap. I guess if I have to do anything, it would be looking at the Dow. Okay, but the Dow is not always the leader. Usually it's S&P. We did fill the gap. It was an inside day. We talked about that. And price did on the high time frame dip into that demand zone there. Now, generally when that leg candle is bigger, we'll look for price to go a little deeper into the zone. And I'll make reference to where an 88.6% retracement is. to give me a reference point for deeper in the zone. Now, what I'm measuring right here is another piece of information here. When you take the range of the Globex high and the Globex low, and you compare it to the daily ATR, okay? I want to see what the conditions are, whether the zone is, or the Globex range is wide, and then I would focus on the bear trap or the bull trap. If the range is narrow, we'll look for more trending market conditions. Okay. And when it's in the middle, we just expect a little bit more choppy. So the Globex range is 286, 431 for the daily ATR. Okay. So we're really borderlining whether it's going to be more choppy or whether it's going to be trending. And of course, if the Globex range is wide, we will look for the bear trap and the bull trap. Okay, so we have trades set up. We have trades set up on the S&P. Let me just go back and review that for the equity indexes. Looking for a long 66.88. Stop loss 66.79. Okay, you can drop down to a smaller time frame. And let's reference where that gap filled. No, it looks like the S&P's already filled the gap. Yeah, we were anticipating that. So based on what I've been sharing with you this morning, the markets were shooting up right at the open. Okay. But with the inside day, we did anticipate that the market should pull back and fill the gap, 5 p.m. close. Okay. But that doesn't mean there's a trade always unless you have a demand zone in that range. Okay. So we're still expecting price to pull back just a little bit further and give us a good entry, because on inside days, we also use the zone entry. Okay. So dropping down to a smaller time frame, we recognize we filled the gap. We recognize it was an inside day. And then we start looking a little bit, we start looking for the leg base group of candles. Now, what you also want to notice is that on inside days, the better trades are taken a little bit later in the session. Okay. I'm also going to outline this a little bit more to show you what we do with our Mastering the Charts Part 1, where we start to outline the picture. So I'm going to describe a little bit more on what I'm looking at. I found a resistance area where sellers there were more sell tickets than buy tickets. We made an accumulation area, and this is where we see the buyers were pushing price up at this point. Okay. Price made a lower low before we took out the sellers, broke above that resistance. Therefore, we're looking for our zone to be a little lower in the range. Okay. Lower 2/3. Now, as you get more familiar, we have a simple 5-step process. Resistance, buy territory, structure plays a big part in this as well. Okay, so let's talk about the structure. We can see that as we're looking at market structure here, where are most of the touches of resistance? Are they on the left, on the right? Where's that low pivot point before price broke out. So now we're looking at this market structure and we're saying, hey, you know what? There's some characteristics. If we divided this range into quarters, okay, this whole range into quarters, we would see that most of the touches are on the left and one in the middle. We also notice that the low pivot point is on the right. Now, what generally happens is price will do that little fake out breakout with this potential or this structure. Okay. Also, that price made a lower low prior to breaking out. We'll look for that leg base lower in the range. Okay. So everything's set. We have the trade identification. Now, trade application. As we apply the trade, we have a potential entry, 66.88, and a stop loss, 66.79. Okay. Now, if that range is too big and even trading one micro or trading one mini, then if it's outside, if the risk is outside your trade plan, then you need to simply just be waiting. Okay. So not everybody explains this when they're trading is, yeah, I'm going long now, I'm going short now, and it's important that every day you're learning something. Okay. Every day you're putting more pieces together. Okay. I like to be very detailed on what the trade setup looks like and not just be out here to do, oh yeah, we're going to go long 66.88 because you won't trust the information until you see it work several times. All right. So let's do a check right now. Are the S&P futures overbought or oversold relative to cash? Right now, cash market got 1, 2, 3, 4, 5, 6 Dow stocks. Five. So almost like 6. I'm going to go with 6 at this point, and 6 negative and 9 or 10 positive. So these are 4 net positive times 2 would be positive 8. So cash and futures are still somewhat balanced on the S&P. Now, when cash and futures are balanced, Apple, Nvidia, you could include Microsoft in this, okay? Are they all correlated going in the same way? If one is up and one is down, we're still anticipating a little more choppy environment, okay? Futures are now becoming overbought relative to cash. 1, 2, 3, 4, 5, 9, 4. Yeah, futures are now overbought relative to cash, but that still doesn't give us an opportunity to take a trade short. We're still waiting, okay? NASDAQ and Q shooting up. Looks like it's going to test that all-time high. Dow. Dow I didn't have a trade set up on Dow, did I? I was waiting for it to come a little lower. Okay, so another example. Okay, we had a buy territory. Price came back down into that range. We had a larger one. Notice where the touches of resistance are and the low pivot point, the little fake out breakout. Okay. It's came back down. So the Dow is pretty much going to be on the sidelines for that Dow trade. Let's see what Russell's doing. Russell's holding a support. And then we're looking for that move down on the Russell, 24.73, 24.69 range. Okay. Now don't start chasing this back to the upside. You haven't missed anything. Okay. Inside days will give you a lot of false type signals, and sometimes you'll feel like you're missing out on everything and you'll start taking trades a little more aggressively. Okay. That doesn't mean you're going to be making money on each one. Okay. Crude oil. Notice Globex range, daily ATR. Notice what crude oil's been doing. Chop, 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 chop. Okay. See, the more that I mention these things and document them in front of you, revisit them, the more you'll retain it. You'll retain the information. Once you verify what I'm telling you or what's showing you here on the charts, then and only then you will be able to incorporate it into your trading plan. Okay. You must verify information over and over again. All right, we're seeing that gas is just also kind of basing here. Now that's a good signal. Gold's moving back up. Our exchange traded funds, a little on the mix side. Bitcoin inside day. Okay. So in the last 3 weeks, I've been doing a little more observation of Bitcoin compared to the equity indexes. Okay. And I've noticed that Bitcoin tends to lead them a little bit. And right now, Bitcoin being an inside day, and we're also seeing some of the equity indexes as inside, uh, things are a little more on the choppy side. Okay. Now, once price breaks and above the prior session's high or prior session's low, then we'll start to see where we have some momentum kicking in. All right, let's take a look at our other picks. Nothing has arrived at its own yet. See, hopefully you're seeing that there are some clues as to when to wait for the trades to come to you. Okay. I know it's common in the industry to, no, I'll just wait the first 15, 30 minutes of the market to see what it's doing and then make a, then make a decision. Okay. Well, that's kind of a very broad range because some days there's trade opportunities in the pre-market and right around the session open. And when we're in inside days, the better trade opportunities are taken a little bit later in the session, generally around 10:30, 11 o'clock Eastern. Now, some of that is because bigger players are unwinding trades, like we see that a lot on Mondays. We also see that they're unwinding some trades due to some of the volatility on equity indexes. Also, I want to reference the equity indexes again, that even the exchange traded funds, as we go back, let's use S&P here as an example. 1, 2, 3, 4, 5. Okay. So over the years, we have also observed that starting about 5 days before the FOMC announcement, the market tends to move up. Okay. Now, what I've been measuring is the move up is generally about 3.5 to 4%. Sometimes more, sometimes less, but on average, about 3.5, 4% price move up. Okay. Now, that generally starts about 5 days before the FOMC announcement. Okay, so the announcement was, let's see, Friday, Thursday. Wednesday. Okay. I think I got that right. Yeah. So 1, 2, 3, 4. Oh, there we go. Need to go down. Okay. So markets tend to rise about 3 to 4% prior to the FOMC meeting. Then they tend to come back down 3 to 4% after the announcement. And we can also see that there's leg base on this time frame. Okay. Now, for many years, it's kind of been that way: buy the rumor, sell the news. And even if the next couple of days, um, well, of course, there's triple witching, quadruple witching is a big part of also the choppy market conditions. We also see on the equity indexes here that the prior session was an impulse move in price, a big move in price. After the impulse comes a correction. Okay. Impulse correction. And then we have to decide, or the market will show us whether it's going to be another impulse move. But things to remember about impulse versus correction is that the corrections take a little bit longer in time and they have a smaller price movement. Kind of what we're expecting today. Smaller price movement, kind of range bound, uh, until we see price break above or below that range, and we'll be kind of waiting. Okay. So, um, expectations today, more choppier market conditions. We're looking for zone entries, no breakout trades. I mean, you can still take them if you want in your own account, but as a rule of thumb, I tend to shy away from the breakout trades on an inside day. Okay. All right. So we've got trades all over the place here. And what we've seen so far as the session's open is a move up, but a move down. We've seen that choppy conditions, and we've been watching that for probably this last week. We've seen each of the earlier portion of the, well, just after the market opens, as the banks and institutions are processing orders, completing their order flow, we've been seeing a lot of this oscillation. Okay. And taking any breakout trades are, often you can get whipsawed on that. All right, let's see where we're at here. I'm going to break this down. I need to do a couple of adjustments. I really don't have any good picture on that. So when we're looking at all four of the equity indexes together, we can see S&P, just take the last 10, 15 bars. S&P is moving down, almost the same slope we see on the Russell. And we see the Dow, but the Nasdaq's a little out of step. Okay. Now, when all the equity indexes look very similar in shape, okay, when they look similar in shape, the markets being correlated produces an environment that is a little more productive, okay, a little easier for trading, okay. I also want you to analyze your feelings. If you feel like you're missing the markets, missing the trades, um, feeling a little bit more emotional, those emotions come out stronger on inside days when there's really not a lot of trading opportunities. So I'm going to break down into some smaller time frames, take a look at the large market cap stocks. Let's drop down to a 5-minute chart since we're not finding much on larger time frames yet. The top three largest market cap weighted stocks, I would go with Microsoft, Nvidia, and then Apple. Okay. So as we're looking at each of those stock, Microsoft, Nvidia, and Apple, are they all correlated, going in the same direction? Since we're looking at that 5-minute chart, use the last, let's say, 10 candles. Okay, if you look at the last 10 candles, you can see Microsoft does not look like Nvidia nor Apple. Apple doesn't look like Nvidia or Microsoft. Nvidia doesn't look like Microsoft or Apple. They're all kind of different. Okay. And when they're all different like this, we are, and in an inside day, the conditions are a little more difficult. Now, I keep giving you uh, chunks of information, little nuggets here to help you evaluate market conditions to where you then pull back on that desire to force a trade or push a trade out there. Okay. And these are all things that experienced traders, people that have long time in the market, okay, they know all of these things. They see them indirectly and directly. Okay. I'm just exploiting them a little bit more. Now they might not say, well, I don't look at all that stuff, but technically they kind of do, especially in trading futures. Index futures are heavily influenced by things outside the price chart. Okay. And when you look at the flow of the NASDAQ futures, you have to see the stocks move first, exchange traded fund move second, and then the futures adjust. Okay. So it's a sequence of events. Futures are derivative. They follow the price or they follow um, something else. So derivative is the futures, stocks, okay, moving up in individual stocks that make up the exchange traded fund. Okay, that would make an exchange traded fund also a form of a derivative. Okay, they follow or adjust up and down by what's going on, what the stocks are doing. Okay. Believe me, I'd rather be having some good trades right now, but market conditions are in market conditions and information that we're gathering are saying, hey, be patient, wait, it'll come to you. And I didn't know these things when I first started out. Okay. All I got in my mind is markets moving, place a trade. Okay. That's some expensive lessons there. All right, we're still waiting on the S&P. Looking for price to still pull back. S&P has filled the gap from an inside day. NASDAQ still has an unfilled opening gap. So, and we're at all-time highs. NASDAQ tends to be is looking stronger than the others. Even on a 5-minute chart, we don't have any indication of reversal. We're still waiting back down for price to come back to us. And Dow. All right. Now, breakout trades. Russell, you can take a breakout trade because it's an outside day. Price broke outside the range. Or you can wait for Russell to break that support, drop into a fair value gap just below the support. But also notice that there is a leg base group of candles on the lower side of that. Okay. So you need to be prepared that price may go a little deeper into that range. Maybe target the lower part right around that 2470 as an entry. At least place your stop below the 2470. Just going to see if there's an opportunity to get into it. I think there was. I just missed it. Take the short. Now, this also can be kind of a trap condition on the Russell. Okay, got a breakout, potential breakdown trade. Okay, where traders may have some stop loss or even maybe be looking to sell short. The profit potential looks like about 5 points. We would look for if you're going to take the breakdown, then you would look for taking profit and then reversing the trade to take it back up. Okay. Let's see if we can do this. I'm just going to do this on a couple of micros, taking the breakdown. Let's just stick with 2.
Order filled.
So I got in a little late. 83 being my stop. And since we're trading 2 micros, once price gets down to the fair value gap area, 2473.30. Let's just go 2473. I'll do one tick above it, 2473.40. I'm going to buy to cover and go long at that point. And then I'll have a stop loss around that 71. Now, breakout trades are often a little more risky, but the Russell is an outside day. It's not an inside day. Okay. Oh, thanks, Matt. Matt's taking a look at United Healthcare. 20-minute. Nice job, Matt. Okay, still on the Russell. Let's go to NQ. Not even close. S&P also waiting. Now keep in mind, I just, I guess I just took a kind of a poke at the Russell here. Okay. But the better trades are going to be right around 10:30, 11 a.m. Eastern. Okay. When we start off as an inside day, we got quad witching. I mean, everybody's making an assumption, oh, it's just going to be sideways, it's going to be choppy, it's quadruple witching, and all sorts of stuff. And we're coming on the weekend. Okay. So they're going to give themselves basically the under well, they're kind of having that conversation that think the markets are choppy. When you observe the choppy market conditions and you align other pieces of information that are outside the price chart, inside day, lighter volume, economic reports, and things like that, when you start bringing in the other pieces of information, it helps you assess the trading environment, also assess the risk involved in this type of environment. Okay. The type of trade will also help you understand the risk that you're taking. Okay. So inside days, things are a little more choppy, especially between 8 a.m. and 10:30, 11 a.m. Eastern. Okay. After that time, things tend to quiet down. We get some trends and things develop. Remember, it's an inside day. So anytime you take a breakout trade, you're taking on a little extra risk. Okay. Versus a zone entry where the risk is much smaller. Having a good understanding of these little pieces of information, and we do provide that in our course material of the pre-market routine. Because everything that I've been talking about is based off of me doing the pre-market routine. Indexes starting out as an inside day. Russell traded outside the prior session range. US dollar 10 and 2-year yield rise in overnight session. Dow 30 stocks are back to light volume in the pre-market. There's no economic reports. Quadruple witching and last trade date for equity indexes. Pre-market trend was low. As we mentioned, the indexes tend to rise going into the FOMC, go back down. So the pre-market routine, once you have a good understanding and see what we're looking at, okay, you'll see that this is exactly what we're covering. And we're bringing into the news. Now, one thing that stood out here is the government shutdown is looming. Okay. Russell scores fresh record high for the first time in 4 years. Why the small cap rally has still room to run. Okay. So a lot of little clues. Dow and S&P and Nasdaq set to retreat from record highs as key option contracts expire. Now, isn't the news pre-market tips, other information that I've shared with you throughout the session, is it helping you understand the trading environment? Okay. And that's what it's all about, is educating traders to see um, and get a good feel for how they're going to engage in the marketplace. Now, that doesn't mean the whole day is gone. It just means that we're waiting when most of the time it's the most active time of trading. Okay. And today I'll be hanging out in the Discord room for a little bit, probably not all day. Um, so if you want to come over there and do some active trading, I also want to mention that There is some promotions going on. We see that Elite Trader Funding is doing a lot of promoting right now, doing a lot of really nice things, especially if you want, if you blow up your account and you need to restart it. There are some pretty significant discounts. Yeah, I'm trying to find it now. Oh yeah, there's a Beat the Beast challenge going on right now. All you have to do is make 700 to 1,000 on a new fast track evaluation account. Thanks for posting that, Ben. I'm probably sorry. Um, so a huge opportunity traders to earn multiple funded accounts. Here's where everything they need to know. Okay, traders must earn a profit target between $700 and $1,000 on a new fast track account. Now, what that's going to do for you is that you don't have to do the full evaluation. You just have to do the fast track, making 700 to 1,000 on that account, and then your account becomes funded. They're also waiving some other fees. Okay. Proof of success must be submitted by 3 p.m. So make sure you read all the rules on how you send that proof of success into that. Okay. And you can get up to 5 fast track accounts. All right. Now I'd highly recommend having a prop account on the side, something that you can do. May not be in your personal account. You might be a little more conservative on your personal account. And as you notice here on our 3-minute chart, even the 3-minute charts are not giving us really any good setups, just a lot of whipsaw back and forth. Good old inside days. It's not only an inside day, it is quadruple witching. Okay. Options expiration, all that fun stuff. Lots going on, but except for trade setups. All right, so starting to get a little move. We're still about 10 minutes before the bottom of the hour. There's also, I think this is still going on, that if you use the promo code, okay, if you need to reset your account or with Elite Trader Funding, if you use the promo code TMI, okay, the market institution, you can get up to a 90% discount on some of the offered products out there as well. Okay. Russell came back into the fair value gap area. think I'm gonna add on a little bit here. I'm gonna add on 2 more micros
Order filled.
and then place my stop loss at 84.50. So on 4 micros, I have $91 risk on that trade. Looking for a profit potential, 24.73. And the stop loss at the 84.50 area. Yeah, look, it just whipsaw back and forth on the Dow. You still have a high probability the gap will fill on the NASDAQ. And crude oil is holding that low, but still really choppy. Globex range compared to the daily ATR. That gas. Yeah, that's been a good one there. I got into that gas earlier this morning. Just looking for it to continue. Boy, soybeans just popped up and came right back down. Oh, Canadian dollar, US dollar must be pulling back here. Yeah. Canadian dollar making a run up to supply. And we have wheat still holding that zone. British pound also running back up. Aussie dollar is being real slow. So some of the bigger challenges are inside days. Markets being choppy, quadruple witching is also kind of, a lot of drama around those days. We need to prepare for what the environment is on the equity indexes. How do we use that information outside the price chart as well as on the price chart? Okay. How do we bring it all together? These are things we cover in our live trading room every session. We also have a community trading room during the week on Tuesdays and Thursdays. On Tuesdays, we had an additional kind of crypto trading. So a lot of activity if you want to participate in that. Okay. Yeah, there's no discount. Hey, good morning. Adil? Thanks, Harvey. Stephanie. So direct to funded fast track account resets. no discount with the TMI code. Okay, you got to use but now they have 90% off of the Diamond Hands end of day one-step accounts. Okay, using the TMI code. All right, so with the Russell trade, we took a little heat on that, managed our risk. We added on when it retested the fair value gap. We are adding to the, or we took the trade initially on the breakout. We are looking for price to drop down to 24.73. And at that point, we will cover our short and go long, placing our stop at 24.71. Okay. So we're trying to visualize the next couple of swings in price, a drop down, and then potential rally back up. Now that would be a perfect world scenario. Okay. It's not been a really exciting live trading room this morning because there's not been a lot of trades setting up for us. Okay. As we can start to see that the equity indexes are really kind of choppy. There's no real trend, short-term trading. Based on things we've shared earlier, we are expecting the gap fill on the NASDAQ, which at some point during the day, we would see price coming back down to 24,715. And that doesn't mean get in short right now, okay? We're still waiting for the opportunity to go long down at this area. Even on the tick charts, the NASDAQ 1500 tick is not showing a good place to get short or long, okay? But it's been a good, hopefully in these sessions when there's not a lot of trading activity, you're picking up on some of the methodology that we teach at the Market Institution. We teach in our Mastering the Charts course, kind of the pictures, the structures, the patterns, our pre-market routine. All of these things are what we use to dial into the market conditions and find our trading opportunities. Okay. If you notice down in the lower left-hand corner there, we are also watching IWM make a new low. Russell iShares trade first, and then the futures adjust to that. All right. Well, I'm going to leave you with that. I will be joining over in the Discord room here shortly, and I'll be hanging out there. If you guys you want to hang out, we'll be in the voice channel, and we'll just be doing some trading into Friday, and we'll see if in the next hour or so, if the markets are going to come back down to where we have some trade opportunities. Okay. Everybody have a good Friday. Sorry things were a little slow. Actually, I shouldn't make apologies for the market. The market does what it wants to do. But we put together the information. We stayed safe. We weren't over trading. And let's continue that through the rest of the session. Okay. I'll see you over in the Discord. Have a great Friday, everybody. Bye now.